Hi, I'm Jim Gosart, Vice President of Republicans Overseas.
And I'm John Richardson, and I work with Republicans overseas.
Did you know that if you own a property outside the U.S. and you sell that property, you owe tax capital gains to the Internal Revenue Service on that property, even if you owe no tax on the sale of that property to the local jurisdiction in which you live. John, does that make any sense?
Well, I understand what you said. It makes sense, but it's totally wrong because the reason that it's very common around the world for the sale of a principal residence to be tax free. And the reason is so that, people can sell their home and buy another home and not be, sort of downwardly mobile, etc. And, this is a big problem in Canada, Australia, all kinds of countries. And what this means is that the principal residence for people living in those countries is often very much a part of their financial planning portfolio, right? So, they will spend a lifetime, perhaps paying off their house. And then as part of their retirement plan, they would sell it, no capital gain, perhaps downsize, etc. But if you're a U.S. citizen living outside the United States, U.S. is not going to let you do that. No, absolutely not. It's taxed as a capital gain. There's a small exemption, but this is a big problem for U.S. citizens living abroad.
And we both have a very good friend living in Eastern Europe. He's been there. He's actually a decorated veteran, decorated war hero of the first Gulf War. And since then, he's been living with his wife and two daughters in a country in Eastern Europe. And his in-laws passed away, leaving their residence willed to his wife and her two siblings. Painful stuff, John. What happens in a situation like that?
Well, if he's married to somebody who's not a U.S. citizen, I mean, the U.S. citizen would inherit it. But you see that what's very common in these, we'll call them mixed nationality marriages, is that the U.S. citizen deliberately is kept off the ownership of the family home, for precisely this reason. And this puts many U.S. citizens in mixed nationality marriages, probably mostly women, in a very extraordinarily precarious financial situation. And I mean, why does the U.S. even have citizenship taxation? I mean, what in the world is going on here? I mean, let's look at what's actually happening. So we have an American citizen living outside the United States, and they're a citizen because they were born in the United States. Maybe they've never even lived there, right, in the United States. And simply because of the circumstance of their birth, they're unable to take advantage of the normal sort of retirement and estate planning rules in their country of residence. Mm-hmm. And what happens is that, they're deliberately kept off the title, the ownership of the property. And, I well remember once Barack Obama or his press secretary once said, the president believes that the circumstances of your birth should never determine the outcome of your life. Well, hello. I mean, isn't that what this U.S. citizenship tax regime is really about? What do you think, Jim?
Well, yeah, and he forgot to tell the IRS that, didn't he? Well, in this particular case, too, it was a combination of a couple of other factors in the tax laws impacting Americans abroad. And this couple has gone through what they call a virtual divorce. All of the assets of the husband of our first Gulf War decorated hero, all of his assets have been placed in his wife's name. And as he said to me, Jim, the only thing I own is the socks and underwear in my dresser. Everything else is in my wife's name. And it works for them. Of course, they're a loving couple and with two wonderful daughters. And this situation, painful, but it's working out. But I got to believe, John, there's a lot of situations where the American spouse, and all too often the wife in the couple, doesn't work out that way, and the potential for abuse is quite high, isn't it?
Not only is the actual potential for abuse quite high, but in professional circles, lawyers, people who do matrimonial law, this is well known. Okay, this is well known.
Mm-hmm.
And it's a way to, really increase pressure on the U.S. citizen spouse to perhaps accept settlements that they might not ordinarily do. There is no question that the citizenship tax regime is incredibly unfair, unjust, and abusive. But when we get into these examples, particularly for women.
Yeah, exactly. And unless you sever citizenship and tax residency, unless you repeal citizenship-based taxation, you can't eliminate situations like this. It's really the only solution, isn't it?
Oh, absolutely. Otherwise you're just into endless whack-a-mole. I mean, we talked about that transition tax thing. Nobody could have predicted that, right? So the only way to protect people from that, and allow U.S. citizens outside the United States to live a normal life that's not encumbered by fear of penalties and the disability with respect to investing in retirement planning, is to completely sever citizenship from tax residency. Full stop. None of these carve outs, none of this making the prison of citizenship taxation better. A complete severance, because that's the only thing that will solve the problems of all people all the time under all circumstances, Jim.
Totally agree, John. Thanks very much.